We're currently experiencing a minor pullback within the crypto market, as you can see over here on the hourly bubbles chart, crypto bubbles chart. As if you look on the daily as well, a couple of coins pulling back. Today's show, I'm going to outline whether this is cause for concern, the next levels to watch for on the pullback, and then I'm also going to outline a potential altcoin rotation. First, it was Aptos, then Matic started to run, and I think I may have the next one. It's not 𝗕𝗬𝗕𝗬𝗕𝗓. 𝗕𝗬𝗕𝗓 just popped off right now as we speak. So without further ado, let's get straight into the show. Fear and greed. We haven't touched on this for quite a long time. Who would have thought in a relief rally we could get the fear and greed all the way up to 55? Big move over there. In the economic events today, we do have something important coming out. It is going to be the core PCE data, the month-on-month that's coming out, 8:30. That is US time, 8:30 a.m. EST. And then I wanted to touch on some macro events which have just unfolded. If you look at this from Michael J. Kramer, he says that the reserve balance held at the Fed has dropped this week to $3 trillion. So good luck with that is essentially what he's saying. And you'll notice a big divergence there with the S&P 500 going up. Generally, the markets are led by liquidity. So many may be wondering, well, why is the market going up if the liquidity is going down? Where is the money coming from? Is it just over-leveraged players that are levering up to push prices higher? Well, we'll need this story to unfold a little bit further to get the true sense of it. I'll probably have to get some info from maybe a macroeconomist, because I don't have the answers for that. All I know is that if the trend does change, I'll be looking to go up. They might be anticipating a Fed pivot. It might be one of the things that they're looking up. So there you have it. SPY up and liquidity is down. And Keith outlines over here that the Fed can't catch a break on unemployment. Despite all of the news about the mass layoffs in tech's, initial job loss claims were again cooler than what was expected. So typically the Fed will want those job loss claims to get higher and more aggressive before they're willing to pivot. And he says they're cooler than expected, likely because the average severance package is 3 months' pay, and then many are finding new jobs before they qualify to file for the next claim. And if you move on to material indicators, they say in translation, the Fed will likely go higher for longer. 225 basis point hikes are baked in before an expected pause as the Fed waits for the lag to catch up a bit. No pivot in sight yet. PCE, which I just outlined, that report is on Friday, which is today. And then we have the Fed funds rate announcement on February the 1st. Buckle up for the ride. Usually the way these things play out is you rally directly into these events and then you sell off after the event. So this might mean that the Fed will continue to raise rates, and before they end up having any sort of a pivot or a pause within their raising of the rates, that could take place maybe only in March, April, sometime around then. So you might still have a couple of weeks left, maybe 4 or 5 weeks left of upside, and Bitcoin can get pretty high in that amount of time. It can definitely get quite high. And we do know that historically what happens is 1 month after the pivot or after the pause, whatever it is you want to label it, exactly 1 month later, with most of the cases I think it's over 90% of them, the market proceeds to have a massive dump. So what should you do? What should you do about all of that? If you are maybe a high net worth individual that's out there with a whole lifetime's worth of earnings and savings, and you want to be very defensive and cautious, then maybe this is a good one to look at. So Captain Jim James over here, he says, we are at a place where weekly and monthly momentum is hiding just under the surface of whatever chart you are trading, all coinciding with the daily, hourly, and minute lines you likely use to trade. First time since 2010 that has happened. And then he says, historically, in every prior instance, the break higher or low has produced a massive market-changing leg. There is no bias up or down historically, with plenty of room to hop on once it is decided. So I'm left scratching my head as to why retailers would want to flagellate themselves to risk of being wrong, rather than just jumping on the train once it starts. If there was a time in 13 years to sit on your hands, it is right now. You nor I need the whole move. Randos So I think you're saying randoms here on financial Twitter, FinTwit, don't feed you, your kids, or your wife. Only you do. So he's basically saying be very, very careful with your capital, right? You want to be in capital preservation mode, especially if you are a high net worth individual. You're probably looking to grow your stack slowly and not overly aggressively. If you're a bit more of a degen, then you probably want to grow aggressively and you don't mind losing a bit of money. So if that is you, I also have something for you coming up soon. It is the next altcoin rotation, so stay tuned. So he said, just to get some clout, internet clout, and then they feel good inside for a day, do yourself a solid and jump on the train once it leaves. You will get paid. This is worth way more. So basically he's saying, when the next momentum move does take place, when all of this unfolds, and we know what the Fed is going to actually do, if they are going to pivot, then pretty much you might miss out some of the move, but at least you're going to get the meat of the move. And that's definitely more important in the long run. Moving on to Bitcoin over here. Yes, of course, we've had a super massive impulsive move over here, currently from bottom to top. That must be one of the biggest. I've probably got to measure this as a relief rally historically. I haven't done this for this show, but I'll do it for the next one or do a tweet thread. But go back on your charts and check the last time we were in a strong downtrend and we had relief off of the bottom from that downtrend. How high did we go? 53.2% is an enormous rally. I think we could potentially get to like 62% at the highest, in my opinion, before a major pullback, if this is not already the start of that pullback. So we'll need to keep a close, keen eye on that. And if you do have a look over here, you do have the S&P 500, of course, which has started to breach through. I mentioned yesterday, keep a close eye on the RSI. Let me probably change the color so you can see that nicely to show the break. Let's make it red. Let's make it light blue. There we go. I'll move this out from there. So you can see the RSI has broken through that trend line that's been holding it to the downside. And yesterday you did get a massive, massive close for the S&P 500. So that is something huge to watch. I'll show you what to expect next on another chart, but here it is on a line chart. Strong breakout. You can see clearly this is the next level. So I'll show you on the line chart first. Pretty much you'll now be wanting to view this as a potential range. Just try that again. If it's frozen, okay, it's not frozen. There we go. You probably want to view that as your potential range. So you have reaching near where the top of the range is at the moment. And don't be surprised if you do see the S&P 500. This is now the 3-day chart that I'm showing you. Don't be surprised if you see it do something like this for quite a while. At the end of the day, you're breaking a strong momentum trend to the downside, which is showing that, similar to what I mentioned on Bitcoin early in January when we broke that lucid saw. I said something is shifting in the market. So it's indicative of a major shift and a potential for a big, big reversal. But 𝗕𝗬𝗕𝗬𝗧 says over here, surely it's not going to be that simple where you just break it and off it goes and that's the end of it. So pretty much I would revert back to exactly what I showed you. Look out for a range. It probably won't be that simple. It's probably going to break into a range. Many people will call for a fake out and further breakdown below these levels, but it's possibly just going to end up staying within this area and bounce back from there. So if you do end up going short from here with your stop above that wick over there, consider taking your profit at the bottom of this range, which is going to be 37.95 on the S&P 500. DXY had a strong reaction yesterday. I still think it can squeeze in a little bit further into this liquidity zone, but I think that you all have to be cautious. I've mentioned many times before, when you see the DXY come into that 101.297 level, consider tightening your stops on your longs if you are currently in a long position. Bitcoin over here, the RSI is currently crossing to the downside. So I am still expecting a little bit of a pullback, but a pullback is not a death sentence. It doesn't mean that prices are going to absolutely nuke, and this is all a major, major bull trap, and we're going to new lows. I'm not by any means saying that. I would be looking personally to bid within this area over here. So you have this fair value gap, as they call it with the ICT guys, fair value gap, which is coming in between 21,100 and 21,500. That is also just above the 0.382 fib retracement level. So if you do see a pullback into that zone, I do think that demand will kick in very, very quickly to buy this area, and it will probably spike up. And I have something super interesting to show you guys on one of my last charts for the show, what happens on a timing perspective every Friday. It's super, super interesting, so stay tuned. The bearish divergence is currently still in play on the 12-hour chart over here. You can see the price is breaking down over here. If it gets back up and we sweep higher one more time, then you might see 3 drives of bearish divergence. That's usually a stronger indicator than the usual 2 drives. So keep an eye on that. That might end up playing out. Total 3 is still yet to break through its trend line. Not much has changed there since yesterday's show. So if you do want more info, just go back and watch that show. Now, altcoin rotations. Shout out to Charlie BTC. He did tweet this out. I've saved it and I'll keep an eye out on it. He essentially outlines a bunch of different altcoins and their relative strength to one another. So the way that this will typically work, you can see Aptos ran, Phantom ran. You had Matic that went for a big run. And now fourth on this list is currently ApeCoin. So ApeCoin is one that has a certain area of interest. Now, the thinking behind this essentially is that when you see coins run with relative strength to the rest of the market, you most of the time you don't want to be trying to fade that. I know a lot of people try to go short on Aptos. I read a sad tweet thread yesterday of a guy that literally blew up everything he's got. He has a little bit of a gambling addiction. I hope none of you out there are suffering from something like that, but he tried to short Aptos, got liquidated, and he lost absolutely every single cent that he's got. He's completely wrecked. He made it through most of the bear market without getting wrecked. Imagine, and now you try and short Aptos and you lose your whole account. That's a terrible story. So it wasn't Ran. 𝗥𝗍𝗄𝗆. Ran does not trade with stop losses, which is a very interesting style of trading. But I think he does calculate his risk management. To be fair, he doesn't use his whole account. So at least he's learned that lesson. So let's move on to the trade over here. This is essentially it. We got ApeCoin on the daily. Here you have the range low, kind of sweep that area. And then I've just marked it out level to level. So areas of interest. I'm going to zoom in. Let's go into the hourly chart over here. And this is essentially the trade idea. You can see the way that price has been reacting. Probably got to go on a little bit of a higher time frame to give you some more reference. So you can see the way that price has reacted into this area at $5.90. So wicks into that area, bounces off, fails to hold those support, breaks down. It's just been a very, very sticky area. We're currently flipping that area into support. You can see the strong reaction off of that 4-hour candle. Take a look at that wick over there. Wick directly into that. If you want to be very, very aggressive on your entry and you don't want to have a loose stop loss, but a tight stop loss, you could potentially put your stop like that just below that 4-hour wick. Otherwise, I would leave it, control your position size. The reason why I have it below that area is because it also matches up with the trend line over there. And this is essentially the play, right? So you're looking to go long on something like ApeCoin. When the market bounces off of this pullback, you expect the ones with relative strength to run the hardest. So you're looking at your next level. First TP would be in this area around $7.50. Your next TP is going to be at $10.54. But if this plays out in the same way that things like Aptos have, I would leave some on the table. I'd probably close out 2/3 of my position coming into the top zone over here, and you could leave the rest potentially to go much higher. I would say at least $14. And then after that, it could potentially even get to these zones over here. This area hasn't been filled for the entire launch of the coin. It obviously launched, pumped up, and nuked down. So these narratives can pick up very, very quickly. It's worth putting a punt in, right? If you take 1% of your capital, even in a spot position, these are such high percentage moves. If you look at that's 70%. You don't even need to touch leverage on this. You can put $1,000 in, depending on your account size, put in $100, $1,000, whatever, leave it in spot, stop loss just below. Percentage wise, where's your stop loss? If you go with the conservative one, then you're looking at 20%. So again, you can't put your whole account in. You lose 20% of your account. If you're going to go tight and aggressive, it's 8.5% away. So there it is. That's one option for you over there. Now, what I'm still looking for, I mentioned yesterday, is a potential drop down below the 50 exponential moving average on the 4-hour chart. Sweep those longs over here. Their stop losses are all going to be lying underneath this. Sweep that. That will quickly spike price back to the upside, and then potentially the next move plays out. I'm going to show you that next move from a timing perspective now. Viking XBT, I see he's looking at the same thing, waiting for something like this to play out on BTC. Take the stops in both directions before deciding which way to go. And here it's from, I don't know how you pronounce his name. Is it 𝗕𝗬𝗕𝗫 or 𝗕𝗬𝗕𝗫? He says, if you're a fan of Bitcoin, just a reminder of what happened the past 2 Fridays. So we're starting to establish a trend. If it happens today, 3 times makes a trend. He says, not that history repeats again, but starting mid-morning, EST price rallied hard 10 to 12% into the daily close. Eager to see what happens for mid to late Friday BTC price action. And there it is. Essentially, if you look at it, it's been bull flag. Okay, price spikes up, consolidates, bull flag, price spikes up, consolidates. Is the same thing going to be true today? I would mark that off on your chart over there. So I've put in a white line over here. If price is coming down into my TP1, this is yesterday's short trade that I gave. If price comes into TP1, timing wise, and we're over here, I'm definitely going to tighten up all my stops and consider flipping long because this would be essentially what I just showed you on Viking. I'm going to clean this up a bit. This was just from yesterday's chart, which is the power of 3. For those of you who are new, I covered on yesterday's show. But essentially, if you do see something like this, where you sweep that area, reclaim into here, that would be an opportunity to immediately flip long. And at that point, you want to close out your short position. So that's what I'm watching over there. If price does manage to get down into this liquidity zone, which is coming in around that 21.5, that's where I take my final TP and I flip completely long, looking for a long entry into that area. Price is essentially ranging at the moment. It's still in a range. You can make a lot of money in these ranges, guys. Really focus on the ranges. Every time a big move happens, wait a day or 2 for the move to complete. So if you look over here, big move happens, just wait a couple of days, right? Wait a day or 2, and usually you see the range establish. So in hindsight, all the information that you'd have is only once you got here. You can mark your lines off on the top, mark your lines off on the bottom, and then you just start to play that range. Get to the top side, short. Get to the bottom side, long. Get to the top side, short. Get to the bottom side. We haven't got there yet, long. And you just keep playing it like that. It's like pretty easy money to trade the ranges. Okay. Longs to short ratio, 162 to 32 to 34 million. So long still completely outweighing the shorts by far. I do think that they will get tested at some point. This is my trade over here. I have moved my stop loss down. It's pretty much, it's in profit. So I took the trade at the top over here. What I am looking at is this. Let's just quickly make that a bit darker for you. This is on my ByBit account. So what I am looking at is this. Proper breakdown of this level, and I'll be looking for prices to sweep. So there we go. Oh, great. It's a different color. You can't see that. Anyway, just look at the mouse. Break down that trend line over there. Hold underneath the range low. So if prices start holding underneath this range low at 22,620, then I'll be looking for a move down to about 21,800. And then from there, potentially down to 21,100, and worst case scenario would be 20,398. And then at that point, I'd be looking to build a long position for a higher time frame, higher low. So that's what I'm watching over there. If you look at skew, he says BTC late shorts are squeezed here. Spot bid is forcing the shorts to cover aggressively in a tight range, and that means that they have to limit up and market buy back their positions. So he says both sides have got squeezed in the same price area. Note funding and the change that happened later. So he's also marked out his levels. And I just think that's the easiest way, guys, is play the ranges. Right now, that's all you need to do. You can make a significant amount of money, wait for a big move, wait for price to slow down, sell the top of the range, short sell it, like decent size leverage, small position, and then long the bottom of that range and make your money that way. Spot continues to sell off, marked by the orange line. The futures contracts continue to cool off as well. So this could be a reset. And that means if it is a reset, then this timing cycle thing could actually end up playing out, going into the weekend price action. There's extremely low liquidity on the weekend, meaning that the market can move quite easily. Which brings me also to this point over here with the Fed's balance sheet dropping to 3 trillion, or their reserve balance at least, meaning liquidity is being drained from the market. That means that this is kind of like a rotational market that's going on within crypto. If there's not new money that's coming in and there's no liquidity that's driving the market, you have to be extra careful. It means you want to be in and out of your positions very, very quick if you are trading, especially in the altcoin. So these rotational plays, you want to make your money and move straight into the next one. Do not get an emotional attachment, because the chances are it's just liquidity moving from one coin to the next within our own ecosystem, right? It's our own little eco bubble that's going on within crypto if there is no new money that's coming in. Okay, that brings me to the end, guys. Wait, one more thing. Make sure, again, I think this is pretty much it. This is the last day. I think from next week, these are probably all going to be given away. This is the Rolex competition. We got the black Submariner, beautiful, beautiful watch over here. And another exquisite one, more rare than the black one, is there we go. Let's just let that focus. There we go. The blue and gold Rolex. So very, very stunning watches. They can be yours. They can definitely be yours. All you need to do is sign up using one of the links below. So if you go into the description below over there, you'll see ByBit giveaways and you'll see Bitget giveaways. Click the link, sign up. Every trade you take is an entry, and we will begin. I think Rand's already tried to give some away, but no one has claimed it yet. You need to claim it within 5 hours of the giveaway. So that's it. Give the video a like. Please give the video a like. I'd really appreciate it. Helps the channel out a lot. Subscribe to the channel and hit the bell notification. I will see you all on Monday. Have a fantastic weekend, everyone. Cheers for now.